There was plenty of news out overnight from both Europe and the US. Firstly, to Europe. The European Central Bank has dropped their base rate to 1% this morning and have signalled that they will buy bonds in order to try and force market interest rates down. This is similar, but on a much smaller scale to what the UK and US central banks started a few months ago. In the UK, they have also decided to throw some more money at financial markets, effectively another £50 billion. This indicates to me that central banks still see some problems to come. In the US, GM announced that they have lost close to $6 billion in the first quarter of this year and sales are down 50%. They look to be heading down the bankruptcy route along with Chrysler. With a bit of doom and gloom back in the midst, global equity markets fell overnight. Despite all of this, the New Zealand dollar keeps climbing, now up over 59 cents. Remember, it was at 56.5 this time last week. Here in New Zealand, the focus was on unemployment on Thursday. Most expected that the rate would climb to about 5.3%. Surprisingly, it came in under expectations and only reached 5%. Effectively, the economy shed 24,000 jobs, or 1.1% of the total, in the first 3 months of this year. This is the steepest quarterly decline for 20 years and wiped out well over all the employment growth for the second half of 2008. Like lamb, venison is faring very well in this economic climate. This year's prices are well up on last year levels and even higher relative to long-term averages. Despite the slowdown in Europe, it seems consumers are still hanging on to venison. A slowdown in the restaurant trade is meaning that supermarket sales are going well. Again, like lamb, supply is underpinning these prices and has kept the market tight.